If you've ever applied for a loan, rented an apartment, or even tried to get a new phone plan, there's one number that decided your fate, whether you realized it or not. Your credit score. It's a 3-digit number, but it might just be the most powerful number in your adult life. In fact, credit scores have quietly become one of the most important and misunderstood systems in American society. Let's break down where it comes from, what it does, and how it controls more of your life than you think. Most people think their credit score just determines whether they can get a credit card or not. That's only part of the story. Your credit score affects whether you can buy a house, the interest rate on your car loan, your ability to rent in certain neighborhoods, your insurance premium in some states, even your chances of getting a job. This number influences where you live, what you drive, how much you pay for basic services, and how people perceive your financial responsibility. And here's the twist, it doesn't necessarily reflect your actual wealth or income. You could be making $150,000 a year and still have a terrible score, or make $40,000 and have excellent credit. Why? Because the credit score doesn't measure your earnings, it measures your behavior. The most widely used system is the FICO score, developed in the 1980s by a company called Fair Isaac Corporation. FICO scores range from 300 to 850. Anything above 740 is considered excellent. Below 580, you're in the high-risk zone. But how is this number actually calculated? Here's the breakdown. 35% comes from your payment history. Do you pay on time? 30% is your credit utilization. How much debt are you using compared to your limit? 15% is your credit history length. How long have you had accounts open? 10% is new credit inquiries. Are you applying for too much, too quickly? 10% comes from credit mix. Do you have a variety of credit types, loans, cards, etc.? Seems straightforward, but here's the catch. Many of the rules behind the score are opaque. You don't control them, you're just reacting to them. And sometimes your score goes down even when you do the right thing. Pay off a loan early might hurt your score. Cancel an old credit card can reduce your average history length. Don't take on new credit. You might be penalized for having a thin file. It's a system designed not around transparency but risk modeling. Not for your benefit but for lenders. And here's where it gets deeper. Your credit score is built on your personal financial behavior, but it's owned and tracked by private corporations. The 3 major credit bureaus, Experian, Equifax, and TransUnion, collect and sell your credit data. You didn't elect them, you don't pay them, yet they hold enormous power over your life. And mistakes. They happen all the time. 1 in 5 Americans has a credit report error serious enough to affect their score. That can mean higher rates, lost jobs, or denied applications. All for data you didn't even know was wrong. Trying to fix those errors. Good luck. The dispute process is slow, bureaucratic, and often stacked against the consumer. So what does all this mean? It means the credit score system isn't just a tool. It's a filter. It sorts people into safe and risky. It decides who gets to build wealth and who stays stuck. For example, let's say 2 people apply for the same car loan. One has excellent credit. The other has average credit. They both buy the same car, but one pays $80 more per month. Just because of the score. That's almost $1,000 extra per year. Multiply that across housing, credit cards, insurance, and a low score becomes a permanent financial penalty, even if you've never missed a bill in your life. Here's the bigger issue. The system doesn't account for the realities of modern life. If you've been through medical debt, student loans, sudden unemployment, your score can take massive hits. Even though those situations aren't about irresponsibility, they're about the cost of surviving. And with more people living paycheck to paycheck, a single missed payment can haunt you for years. So how do you protect yourself? Start by knowing your score regularly. Websites like Credit Karma, Experian, or your credit card provider often show it for free. Don't max out your cards. Aim to use less than 30% of your limit. Always pay on time, even if it's just the minimum. Keep your oldest account open, if possible. Avoid applying for too much credit at once. And if you see an error, dispute it immediately. Don't wait. Remember, this number follows you, even when you move, even when you change banks, even when you think it doesn't matter. The bottom line? Your credit score isn't just a financial stat, it's a modern class system, encoded in numbers. And the less you understand it, the more power it has over you. So don't ignore it. Learn how it works. Because in a world where data is currency, your score is your price tag. If this video gave you clarity, hit subscribe, because your financial knowledge should never be optional.